Okay, so today we're gonna tackle something pretty big.
Yeah.
Looking at the forces that shape not just, economies, but the entire global order.
The whole shebang.
Yeah. So you guys have sent in a ton of really fascinating material.
It's a lot.
It is a lot. Yeah, looking at, the rise and fall of empires
Right.
and debt cycles and how the value of money changes and what happens, when countries kind of face financial meltdowns.
And when it all goes to pieces.
Exactly. So our goal is to kind of, synthesize all this stuff and pull out those crucial patterns that help explain how the world works on a grander scale.
Yeah, I think what jumps out to me immediately is this idea of big cycles.
Yeah.
I mean, it's this idea that history isn't just random, it's not just a random walk, but it unfolds in these long rhythms.
Right.
And they say it's roughly like 80 years,
Okay.
like about the span of a lifetime.
Wow.
So you see these major shifts in terms of, economic power, the stability of countries internally,
Right.
and then also geopolitically the kind of external order and disorder.
It's kind of a mind-blowing way to look at things because, it makes you realize that a lot of what we think of as these kind of, short-term crises or whatever are potentially part of these much larger waves.
Totally. Yeah.
So
Yeah.
so if these big cycles are happening, what are those kind of key drivers that are moving them forward?
Well, the material points to a bunch of different factors,
Yeah.
but the big one I think is the debt and credit cycle,
Okay.
and that's tied to money, of course,
Yeah.
and just the economic cycle broadly.
Right.
But you can't separate that from what's happening inside countries politically.
Yeah.
So you've got the internal order disorder cycle,
Okay.
and then externally, between countries, you have this geopolitical order and disorder cycle.
Okay.
And then, of course, you have unpredictable stuff like natural disasters.
Right.
And then this other big factor of human ingenuity,
Yeah.
which is really driven by technology.
Yeah.
These big breakthroughs.
That makes sense. So it sounds like a very, very complex machine,
Yeah.
where all these different pieces are influencing each other.
Yeah.
I mean, you could have a financial crisis that stirs up political unrest,
Yeah.
which then maybe escalates into international tensions.
Totally.
And then boom, somebody invents something that changes the whole game.
Right. Completely changes the rules.
Exactly. So let's try to focus in on one of those gears in the machine. And that seems to be, debt cycles. This is something that comes up again and again in the materials.
Like the central theme.
Yeah.
So this long-term debt cycle,
Yeah.
it tends to start in a phase of sound money and credit.
Okay.
And by that, I mean, people are pretty cautious about lending and borrowing.
Right. More conservative.
Exactly. Yeah. And then it kind of shifts to a period of much looser conditions.
Okay.
And, eventually this loosening leads to a debt bust,
Oh.
where all that accumulated debt, it just becomes unsustainable.
Yeah.
And then it forces this reset back to a more conservative approach.
So it's like a rubber band stretching and stretching and then finally snapping.
Exactly.
Got it. And the sources mention this idea of imagined wealth being created during those periods of excessive debt.
Yeah.
What do they mean by that?
Well, imagined wealth it's this idea that asset values get totally inflated
Okay.
when they're built on this foundation of rapidly growing debt.
Okay.
So what happens is the debt and the cost of servicing that debt grow faster than the income needed to actually repay it.
Right. So it's not real wealth.
Exactly.
It's kind of built on this house of cards almost.
Exactly. It's like a mirage.
Yeah.
It looks real for a while, but it has no solid foundation.
And we've seen that play out, in things like the dot-com bubble and the housing crisis.
Yeah, exactly.
Those were examples of this imagined wealth.
Absolutely.
All right, so another really interesting part of this is how the sources look at the changing value of money, and specifically the role of reserve currencies.
Yeah.
It's something we don't often think about.
Most people don't even know what a reserve currency is.
Right, exactly. And they illustrate how the value of money isn't fixed at all.
Right.
It fluctuates over time, especially when you compare it to something tangible like gold.
Right. It's all relative.
Yeah. And then we see these historical transitions between different reserve currencies.
Yeah.
It started with the Dutch guilder and then the British pound.
Right.
And now, of course, we have the U.S. dollar.
Right. And who knows what's next?
Right. And the sources have all these charts and graphs that really bring these shifts to life.
Yeah.
And it shows the factors driving those changes, like, economic power and trade and geopolitical stability.
It's fascinating, right?
Yeah, it is. And the fact that the dollar isn't the first and won't be the last global reserve currency.
Yeah.
I mean, that's a really important long-term perspective
Totally.
to keep in mind. So the sources also talk about some pretty drastic actions that countries have taken during crises,
Yeah.
like things like wealth confiscation
Mm-hmm.
and capital controls.
Yeah.
That sounds pretty extreme.
It is. It's pretty scary, actually.
What exactly are we talking about here?
Well, wealth confiscation is when the government just seizes private assets.
Wow.
Yeah, on a large scale. I mean, they just take it.
Wow.
And then capital controls are when they put really strict limits
Okay.
on investors being able to move their money in and out of the country.
So basically they're trapping people's money in the country.
Yeah, it's a way to prevent capital flight.
Yeah.
And the sources say that this kind of stuff tends to happen when governments are facing like existential financial crises
Okay.
or major conflicts.
Right.
And we saw this a bunch throughout the 20th century.
Yeah.
I mean, we're talking UK, USA, China, Germany, France, Russia, a whole bunch of countries.
Wow. And they actually did this.
Yeah, even the US at certain points.
It's a reminder that governments can have a huge impact on individual wealth.
Yeah, especially during times of crisis.
Yeah. And so let's turn to the present now. The U.S. is kind of presented as being in a significant phase of this big cycle,
Yeah.
especially with the levels of government debt that we have.
Yeah, that's a big one.
Yeah. So they point out that U.S. government debt as a percentage of GDP
Yeah.
is at levels not seen since World War II.
It's pretty crazy.
It's a lot to kind of wrap your head around.
It is.
And so this creates a challenge when it comes to rolling over that debt,
Oh,
which
yeah.
essentially means, borrowing more money to pay off the old debt.
Right.
And then the sources point to 1971 as this pivotal moment
Uh-huh.
when the U.S. moved from a gold-backed dollar to a fiat currency system.
Yeah.
So talk about that shift a little bit.
Sure. So on one hand, it gave the government a lot more flexibility in creating money,
Okay.
but it also comes with risks.
Like what?
Well, mainly devaluation,
Okay.
which is when the dollar's value decreases.
Right.
And then there's inflation,
Right.
which is when prices go up generally.
Okay, so basically with fiat currency, the government is saying this piece of paper has value because we say it does,
Yeah, pretty much.
rather than it being tied to something tangible like gold.
Right, exactly.
And so without that link to a physical asset, there's more potential for an oversupply of money,
Yeah,
which then erodes its value.
exactly. And
Yeah.
that's what causes inflation.
Okay, so it's greater freedom for the government,
Yeah.
but also greater potential risks.
Right. They have to be responsible.
Exactly.
Yeah.
So the sources also have this great powers index for 2024.
Oh, yeah.
It sounds like a really valuable snapshot of the current global landscape.
It is. It's really interesting.
So how does this index work?
Well, they rank 24 leading countries across 8 key measures of power.
Okay.
And it's not just military strength. It's broader than that. So they look at economic output, trade technology, education, cost competitiveness,
Okay.
the strength of their financial markets, and their reserve currency status.
Wow, it's pretty comprehensive.
It is. It paints a really good picture of overall national power.
So where does the U.S. stand in this 2024 snapshot?
According to the index, the U.S. still has some big advantages,
Okay.
especially its capital markets. They're the biggest and most dynamic in the world.
Okay.
Its equity markets are dominant, and the dollar, of course, is still the main currency for international transactions.
Right.
It also has the strongest military
Yeah.
and a leading position in education and technology and innovation.
Okay.
But the index also shows some areas where the U.S. is facing challenges.
Okay. Like what?
Well, labor costs are pretty high, even when you adjust for quality.
Okay.
And it has this huge debt burden
Right.
that needs to be managed carefully.
Yeah.
It also mentions the growing gap between the rich and the poor,
Right.
which could lead to instability down the road.
Yeah, for sure. So it sounds like the U.S. is still a leading power, but it's definitely facing some headwinds.
Yeah, I would say that's a fair assessment.
So what about some other countries? What about Germany?
Germany.
Yeah.
Yeah, so they're also noted for having expensive labor, even when you factor in the quality of their workers.
Okay.
And their military is comparatively weaker,
Okay.
but they do really well in terms of like societal well-being.
Okay.
They score high on measures of happiness and health.
That's great.
Yeah, and they're projected to have decent productivity growth over the next decade,
Okay.
but their level of debt could hold them back.
Yeah, that seems to be a recurring theme.
It is, yeah.
What about Japan? They've been dealing with some economic challenges for a while now.
Japan is interesting.
Yeah.
So the sources say they're really strong in innovation and commercial dynamism,
Okay.
and they have a very highly educated workforce,
Okay.
but they have a big problem with their population. It's aging and shrinking,
Right.
and they have a ton of debt. Really high levels of debt and debt service.
And it's been that way for a while.
Yeah, since the 90s, they've been struggling with low growth deflation,
Right.
and the government has had to print a ton of money to try to keep things afloat.
So they're kind of stuck in this debt deflation trap.
Yeah, it's a tough situation.
Yeah, it sounds like it. And it seems like productivity is a key factor for success.
Oh, absolutely.
Regardless of where a country stands right now,
Yeah,
the sources really emphasize that.
they do.
So what are they saying about productivity?
Well, they say that a nation's productivity is the fundamental driver
Yeah.
of long-term economic prosperity.
Okay.
And that's determined by the value of its labor,
Okay.
taking into account, education, work ethic, and cost,
Right.
and the overall culture,
Yeah.
including things like innovation, self-reliance, levels of corruption, rule of law,
Right.
those kinds of things.
So it's not just about spending or population size.
No, it's about efficiency,
Yeah.
getting the most out of your resources.
Okay, so one of the sources we have is titled How Countries Go Broke.
Yeah, that's a catchy title.
It is, yeah.
Well,
So what are the typical signs that a country is heading down that path?
Well, they describe a pretty consistent pattern.
Okay.
It usually starts with a buildup of debt,
Okay.
often because they're borrowing to finance spending that exceeds their income.
Right, they're spending more than they're taking in.
Exactly. Yeah.
Right.
And eventually that debt reaches a point where it's just unsustainable.
Okay.
They can't even make the interest payments.
Wow.
Yeah. And then things start to unravel.
So what happens then?
Well, a lot of times the country tries to defend its currency
Okay.
by selling off its foreign exchange reserves,
Okay.
which can buy them some time.
Right.
But if they don't fix the underlying debt problem,
Yeah.
they're going to run out of reserves,
Okay.
and then their currency is going to crash.
So it's a loss of confidence from investors.
Exactly.
They see the writing on the wall.
Yeah, and they start pulling their money out.
And the sources say that gold often rallies during these currency crises.
Yeah, that makes sense.
Because it's seen as a safe haven.
Exactly.
Yeah. All right. So what about monetary policy? What role does that play in all of this?
Well, the sources suggest that monetary policy becomes less and less effective
Okay.
in the later stages of these debt cycles.
Yeah. Okay.
So initially, easing monetary policy.
Like lowering interest rates.
Yeah, exactly.
And increasing the money supply.
Right.
That can help stimulate the economy
Mhm.
and manage debt burdens.
Yeah, for a while.
But when debt levels are already really high,
Yeah,
further easing can just lead to more inflation
Right.
and a weaker currency.
exactly.
And it doesn't really boost the economy.
No, it's like pushing on a string.
Yeah, it's like it's not having the desired effect anymore.
Exactly.
And they point to the recent shift from easing to tightening in the U.S.
Yeah, after 2020.
as an example of that.
Yeah, and we talked about Japan earlier.
Right.
They've been trying to use monetary policy to escape this debt deflation trap,
Right.
and it's just not working.
It's a really complex situation.
It's a tangled web.
It is. So we've covered a ton of ground today.
We have
From these big picture ideas of cycles
Yeah.
to the nitty-gritty details of debt crises and the limitations of monetary policy.
A lot to take in.
It is. So let's try to pull out some of the key takeaways for you.
Okay, sounds good.
So we've seen how history tends to unfold in these long cycles
Yeah, these big cycles.
that are roughly the length of a human lifetime.
About 80 years.
Yeah, and these cycles are driven by all these interacting forces, economic, political, social, technological, and even natural forces.
It's all connected.
It really is, yeah. And a crucial element is the debt cycle,
Yeah.
which can create those periods of inflated asset values.
Right, get those bubbles
Yeah.
that eventually burst.
And we've also seen how the global power landscape is constantly shifting, with the rise and fall of empires and reserve currencies. And unfortunately, we've also seen how countries can go broke
Yeah.
when debt becomes unmanageable.
And trust erodes.
Exactly.
Yeah.
So hopefully, by understanding these cycles
Yeah.
and the factors that contribute to national success and financial stability,
Yeah.
you now have a more valuable framework for interpreting the world around us.
I hope so.
Whether you're making business decisions or trying to make sense of global events or just, curious about how the world works.
Right.
these long-term perspectives can be really insightful.
Absolutely.
And the examples of wealth confiscation and capital controls, I mean,
Exactly.
those are pretty sobering.
Yeah.
They really make you think about the long-term security of assets
Yeah.
and the analysis of the current global powers.
Right.
That gives us a better understanding of future economic and geopolitical trends.
Yeah. It helps connect the dots.
So this all leads to a really important question for you to think about. Considering those historical patterns we've talked about,
Uh-huh.
especially the high debt
Yeah.
levels and the internal divisions that we're seeing in a lot of major powers today,
Yeah.
what do you think are the biggest risks and opportunities?
What's coming next?
Yeah, over the next decade.
Right.
And how might things like rapid technological advancements and this increasing geopolitical competition further shape the big cycle that's unfolding?
It's a fascinating time to be alive. That's for
It
sure.
is. It really is. There's a lot to think about and consider.
Yeah. Keep your eyes open.
Exactly. So thanks for joining us on this deep dive.
My pleasure.
We'll see you next time.
See you later.